Hello everyone, this is Market Daily where I bring you the latest in trends and money. Today I'm going to discuss what course of action should we take when there is a crash. As of today, Nasdaq falls 2% as tech sell-off continues. Tech shares drops for a second day on Tuesday in the face of higher interest rates and rotation into stocks more linked to the economic recovery. The Nasdaq Composite slipped 2.1%. falling below its 50 days moving average, a key technical indicator for the first time since November 3rd. So in the early trading hour today, everything was red. You can see from my watch list, every single thing was dropping really hard. For Tesla, it was from 669 and go all the way down to even 619.5 low at some point. So what do we do when there is a sell-off? First of all, stay calm. Many investors lose money during stock market downturns as a result of sheer impulsiveness. While it's easy to panic when your portfolio value takes a hit and you see red everywhere, but remember that stock market crashes are often temporary. Just think about the bear market back in March 2020. The stock market lost about 30% of their value, which is actually, I remember that was 35% for some stocks in single day, and the market bounced back well before the end of 2020, and that was during a pandemic. So as such, a stock market crash shouldn't lead you to assume that you'll be there for multiple year recovery, so you shouldn't lose your cool if stocks take a transient hit. Second, do not sell investments unless you absolutely need the cash. You only lose money in stocks when you sell your investment for less than what you paid for them. Remember that. So if the stock market crashes in 2021, there is really no reason to unload investments unless you desperately need the cash. And you can avoid that scenario by amassing a solid emergency fund ahead of time. For me personally, I usually keep an emergency fund of 6 months expenses, so that way if there is a crash, will survive for another 6 months before having to touch into my investments. The third advice I have for you is to use cash to buy the dip. Now, stock market crashes are seen as a bad thing, but it doesn't have to be the case. If you really like a specific stocks, a dip is a chance to buy up quality stocks for cheaper price. Put together a wish list of stocks you want to buy but are too expensive for you at the present. So that list can include stocks you already own, as well as stocks you haven't yet added to your portfolio, but you are waiting for the right time. While when there is a dip, that's the time you want to go in. For me personally, I've been holding a lot of Tesla and I can't wait to get more of them. So yesterday when it hit some bottom of 620, that was one of the best moments for me yesterday. And you can see it bounces off very quickly. If 2020 taught us anything, it's that life has a way of surprising us and not always for the better. So when it comes to the stock market, it's never a bad idea to hope for the best but plan for the worst. And I also have another solution for the dip. So every day when you go into, before the stock market open, you should look into these two ticker. One of those is UXVY, Pro Share Ultra VIX Short Term Future, and SVXY, the Pro Share Short VIX Short Term Future ETF. If the UVXY is going up, that means there is a lot of volatility in the market. So if there is a lot of volatility and they might trigger a sell-off, what you could do is to buy the inverse leverage ETF, such as FNGD. This one is Microsectors FANG Plus Index. It's a 3x inverse leverage ETF, exchange traded notes. So for me, this morning I see there is a dip. I set aside some money to buy into Tesla, and I also bought in the FNGD And once the things start to cool down, which you can see by the VIX volatility index, you can start unloading the FNDG right here. So when it increases, it's usually easier to sell on top. You don't need to go all the way to the top. As long as it's increasing, you make some profit, you can sell. This is one of the way you can make some money when there is a sell-off in the market. And there's all kind of inverse index, but for me personally, I prefer the one that is leveraged, so you can gain a quick buck here and there, so to cover the loss. So there's a lot of inverse index that you can play with. Even this one, you have daily semiconductors bear, which is also 3 times leverage. So if on a red day, you can always count on these guys to take back some losses. The most important thing is to never panic sell. That's the worst, because you only realize loss when you sell your stocks. That's all I have for today. Thank you for watching this video, and please like and subscribe for more content and research. I'll be coming back with some really interesting penny stocks that you can add to your watch list or even add to your portfolio tomorrow. For now, goodbye.